the strongest plays and the players are not American, right? We talk a lot about it, but the biggest money doesn't come from here, and the biggest day-to-day usage from everyday people is not happening here.
A little bit better unemployment rate, a little bit better job growth for 2021, but mostly leaving its forecasts unchanged.
It's happening elsewhere around the world, but a lot of the development, not even the biggest, is happening here, right? A lot of the biggest and the original stuff that's been going on for a while is happening in Asia. And so, we have the opportunity to really have an impact, but we can't think, Americans like to think that we're always the biggest and best at everything, but we're not really in this particular case. And that can be concerning, because if we don't, it's just like, look, most of the internet's in English, right? In terms of the governance, DNS, et cetera. And so we've got to really, hopefully, be a leader in this. Now, there's a lot of ways to discuss that. Does that mean selling half the gold in Fort Knox and buying a basket of Bitcoin and Ethereum and maybe some others? I would be all for that, because I think gold is useless, right? Gold bugs will tell you that, well, it has intrinsic value. It has this much intrinsic value for manufacturing applications, and all that jewelry usage. There's no law. There's no law of physics that says gold jewelry is more valuable than any other metal being created into jewelry, or for plastics in jewelry for that matter, right? That's just a narrative that we've all accepted. Hey, gold is better, gold band, gold jewelry, whatever, and so every store of value has a story, whether it's Bitcoin, Ethereum, or gold. And so if we're going to have a store of value that at least is more useful, I'd rather have Bitcoin and Ethereum in Fort Knox than I would gold. But a lot of that is just, we need as a country to start recognizing that crypto is real. And two, it makes better business sense as a country than it does for a lot of other applications. I'll give you an example. If we created our own USDC, right, issued by the Treasury, we lose money on every penny minted. We lose money on every nickel, dime, and maybe even quarter minted. We lose money on dollars and having to recycle them, right? It's bad business. And now with the pandemic,
the number of cases of COVID-19 outside China has increased 13-fold. And the number of affected countries has tripled.
Where if you have to go into a store, if you still go into a store and you have to use cash and you get change back or you get dollars back, your first thought is, should I even touch that thing, right? And so with trying to get to a touchless society for economics, USDC issued by the Treasury makes perfect sense. And so being a leader there, and I think hopefully we'll have conversations with politicians and leaders in government to convey to them that 99% of transactions are already digital, right? We already have a USDC. It just doesn't get down to the consumer or retail level. We just don't call it that, right? When I do a wire transfer, it's in dollars, but it's all digital. No one's printing anything out, hopefully, to confirm it until after the transaction. And then therein lies the rub, because all the centralized interests, government, but even more so the big banks, they have a vested interest in not seeing this happen, at least the way things are set up right now. And so that's going to be the battle. So we'll go back to the 90s. So broadcast.com was going public in July of 1998. And we go on this thing called a roadshow. And a roadshow is where you make a presentation to investors. And we even got to take the Concorde to go to London and come back the same day. It was unbelievable. But we would go into these presentations and we could see their eyes just glossing over. And there were rarely any questions. And the questions just showed that they had no clue what they were investing in. And then we go public. It's the biggest one-day jump in the history of the stock market at that time. Everybody placed their maximum order and the price just skyrocketed. But none of those people had a clue or understood the technology of what we were doing. None. And so it's no different here. I mean, that's just the way it is. People are momentum investors in a lot of respect. Investing and working with some of these companies, I'm like, you got to do me a favor. If I'm going to invest, here's what you got to do. You have, before you hit confirm, right, for that swap or whatever, deposit, whatever it may be, you need to put up the transaction fee versus the APY, and how long it'll take you to earn back your transaction fee, right? Because people will see an API of 60% or 70% and invest $100 or $1,000 and have a gas fee because they do it the wrong time of $100, right? And that's 10% immediately right off the top, and don't realize even if it's a 50% APY, that's an annual yield, right? And you got to hold it long enough to cover just to break even before you even think about it, right? And they don't do the math. And so I'm like, you got to save the little guy, because otherwise, if you don't take care of the little guy like that, it's going to backfire on the whole industry. And, whether it's Aave or others, you don't see that, right? And that's going to create problems because, there's a lot of people yield farming on a small level trying to figure it out and losing money, including me. Because when I first learned it and I first did my first deposit and then did some yield farming where I deposited and I saw a high APY and I wanted to see what happened. And then I was like, yeah. And then I swapped it back out, losing money, thinking I'm getting this high yield, right? I mean, I'm teaching myself Solidity right now. I'm taking Solidity tutorials so I understand smart contracts better, because it's important for me to be able to say, okay, this is what you can do with a smart contract. It's almost like artificial intelligence, right? So everything, AI is included in almost every investment. Crypto doesn't really talk about it, but every traditional regular business company does. And so I'm taking you tutorials in AI. I'm learning the difference between GANs, CNNs, reinforcement learning, all this stuff. I'm, doing machine learning tutorials, reading books, whatever, watching the videos, so I can learn, because I got to know what's real and what's bullshit. And 99% of the deals that say they have AI or computer vision are bullshit. They have one guy or one person who is there, that went to MIT or Harvard, that took a class in data science and has done, a 3-layer neural network like I have, and that's it, right? And they're going to try to figure it out. AI is hard. Crypto is easy, relatively speaking, but you got to learn. You got to learn what it is in order to be able to make legitimate decisions. VR, I've got a patent pending with a medical application for VR. I got, a patent that was issued for computer vision for counting things from the air on the ground. I mean, I had help, but these are things, over the years, just diving in. And what you learn very quickly about technology generally is once you get these fundamentals in place, it's not hard to add new things, right? DeFi is really straightforward if you just try it and you understand the principles behind it. But you've got to understand finance to a certain extent. You've got to understand why people are chasing liquidity, or why the DEXs are chasing liquidity and trying to offer these yields, and why it's a game of musical chairs. But that just takes time and experience to do it. And put aside the art side of it and the music side of it. Look at it from a business side of it. Literally, I'm checking the market caps of the biggest companies that create college textbooks, and asking, if they were severely undervalued, and like all companies now, they're overvalued to a certain extent. Relative to interest rates are not overvalued, but relative to history, they are. Just looking to see, should we be looking at buying these college textbook companies? Because there's no good reason at all to have a physical college textbook. The only reason they do it is because that's the way they've always done it. But the new style college textbook company is going to use, the equivalent of an NFT, whatever they decide to call it. Because now with college textbooks, they lose the resale value. That's why they're overpriced so much, right? So many kids buy, used textbooks like I did when I was in college, because that's just a smarter way to do it. Maybe you get some good notes in there too. And so, but now, because you can get your royalties ongoing, right? Why wouldn't you do every college textbook as the equivalent of an NFT, whether you call it that or not, and then just issue it? You can charge less, knowing you're going to get 25 or 30% of the resale value and make a shitload more money. Those are the things that are going to drive this NFT to a $100 billion industry. It's not going to be artists, because you're going to start getting into long tail that's too long, right? It's like publishing a book. Anybody can publish a book. You can get it in bookstores if you work hard enough. That's not going to mean that there's a market for it and people are going to buy it.